Hi guys, this is Andrew from Trading Mastery. Welcome to today's trading tip. There is so much to be learned in the middle of earnings reports every season. This week is the biggest week for earnings reports every earnings season. We're in week number 3 right now, and we've got over 100 businesses releasing third quarter earnings. And we've got some of the biggest names in the world of listed companies releasing their reports this week. Amazon, Apple, Visa, Caterpillar, Ford, GM, McDonald's, Twitter, Facebook, you name it, they're reporting. But there is something that is so obvious for everyone to see. You should be able to see it on your own charts when you look at the prices. When we see earnings beat expectations, and when we see the management of those businesses talk about the fact that earnings are going to be better in the future, and we've just had a record earnings month in the previous quarter for the company, what you're likely going to see is further share price appreciation. And 2 examples of that this week have been Alphabet and Microsoft. And right now, as the global economy starts to recover, we start to see people win their jobs back. We see this huge consumer demand for product and services right now that drives up inflation very quickly. For example, in the United States right now, we have high inflation that's starting to be of concern. We certainly have high oil prices. And if inflation doesn't start to come down in early 2022, that could pose a problem for the economy, because if inflation stays up, central banks will be forced to raise interest rates, and then people stop spending money, and that could cause a recession. But any business right now that has what we call pricing power. Pricing power is when they're able to pass on any inflationary price pressures that the business has. So for example, manufacturing businesses that have to deal with raw materials. If they're not big, powerful brands that consumers have really strong demand for, like Apple, for example, or Coca-Cola, if they're an also-ran business that is a manufacturing company that is having significantly price increases on raw materials, and they're not really able to pass those costs on to consumers or businesses or people who are buying their products at the end of the day, because their brand is not that strong that they can just simply put up prices, they are going to struggle. And what we've seen this week is Alphabet and Microsoft is a classic example of 2 businesses that are online internet service businesses. There are no raw materials. There are really no wages pressures to be concerned with, because if Microsoft and Alphabet do have wages pressures, etc., they can just let go of some staff if they need to. Mind you, at the moment, Alphabet is looking to hire another 6,000 employees in the next quarter. But Alphabet and Microsoft doesn't have the price pressure issues that a manufacturing business like Boeing would have, or an auto company may have, or some sort of tool manufacturing business may have. So we're seeing the share prices of businesses like Alphabet, like Microsoft, like Coca-Cola move higher because the brands are so strong. For example, in the next 24 hours, we're going to see earnings from Apple and Amazon, another 2 businesses that will be able to pass on those price increases. And the reason I want to share this with you today is because you want to have a portfolio that is packed full of businesses that actually have pricing power. So do the businesses you own have pricing power? Because if they don't, the probability in 2022 is that they could struggle. Now, I'm going to say this right now, that if inflation remains high in the first half of 2022, there is the potential that we could see share markets decline 20 to 30%, because we could be heading towards a recession if inflation globally, if we see hyperinflation of 4 or 5% in the first half of next year. Interest rates will be raised very quickly. That'll spook financial markets, that'll spook housing markets, that'll stop people spending, and we'll see share prices cheaper. But right now, what we're seeing is businesses thrive, beat earnings expectations, And the big, powerful, predictable earnings winners that are passing on those prices and not having any problems are seeing their share prices continue to go higher, and those of us that own those great businesses are continuing to make great returns. If you want to learn how to make great returns, if you want to know how to build a wonderful portfolio to withstand inflationary pressures, price pressures, wages pressures, and be able to thrive into the future at a higher rate than the average index value, then make sure you get across to our website and get access to that free 7-part training program. Have a wonderful day. Keep your chin up. Look after your risk management. I'll see you next week.